of CPI growth in 8 months' time. And so now everybody's trying to figure out how the Bank of Canada is going to navigate through this. Just a reminder that the Bank of Canada's next interest rate decision is April 16th. Well, technically, that would fall after we're anticipating this next round of tariffs. Some economists already this morning are suggesting the bank may have to take a hawkish detour during this rate cutting cycle in light of the inflation reality. For more on how investors might be interpreting this, let's bring in Laura Lau, Chief Investment Officer of Brompton Group. Laura, great to see you. Thanks very much for stopping by.
Thank you, John.
Okay, so we got to pull out the pen and look at the economic realities that are staring us in the face right now. When you see a inflation print that reminds us that we're not quite through the inflation realities, what goes through your mind?
Well, I think that we've also had a weaker Canadian dollar, and that has added to inflation. So I think, as you said, the Bank of Canada is kind of in a conundrum. What do they do? Because their mandate is inflation, and inflation's creeping up, yet they also want to keep the economy going. So I think we'll have a better idea what's happening with tariffs April 2nd, and then also they do have some time for more economic data. So they don't have to cut in April, they can just take a pause and see what happens. So that's probably the most likely scenario at this point.
You wouldn't be surprised to see them take a pause after, I think it's 7 straight rate cutting moves by the bank.
Yeah. So in general, Canada, the economy has performed better than expected. And I think it's because of those rate cuts. But I do think maybe that would give them, a reason to just pause and see what happens.
And I guess, when we're trying to decide what matters most, because some people have this fear that all of this tariff activity is going to be inflationary, but there's also a recessionary risk from it. And at a certain point, which do you want to focus more on? The growth hit concern or the inflation that comes? And maybe it's a combination that ultimately just creates a real challenge for Canada.
Well, we do know that the Bank of Canada is very concerned about tariffs. They do realize if the tariffs are on for prolonged period of time, like even 3 months, Canada will go into recession. So they are mindful of that. And then that would bring inflation down. So that's why they're walking a tightrope right now.
And how, as an investor, are you thinking about all of this?
So I would say right now, what we've seen, especially in the United States, is a lot of the funds flow has been leaving the U.S.
Yeah.
Partly because the U.S. Economy is slowing down. There's a growth scare, and the U.S. was expensive. But I think the big thing was we started the year with U.S. exceptionalism. U.S. is the only place to be. They're the market that's going to grow. The economy's doing better, and all these positive, narratives around what Trump is going to do. And then now we're seeing that a lot of what Trump's doing with all this uncertainty, tariff noise, government layoffs, a lot of that is actually bad for the economy. And yet we're seeing around the world, other countries are starting to respond to say we can't depend on U.S. growth anymore to bail us out. So for instance, Germany, for the past 2 years, they've been in recession. Their economy has shrank. And now they are passing fiscal packages, $500 billion for infrastructure, increasing defense spending, and they are the ones that are able to do it. Their debt is low, and they've been the ones not really willing to spend. So that should help European growth. So we're resetting expectations in Europe that it looks like things are going to be better than expected. There's also talk about the Ukraine war, negotiating a ceasefire. So Europe is investable again. So we've seen a lot of funds flow out of the U.S. into Europe, and Europe has been a far cheaper market. So we've seen that, and Canada is also a very, it's not an expensive market, but we are tied to the U.S.
Yeah.
So that's, the danger there, that these tariffs can definitely, reduce economic growth in Canada. But from a political standpoint, it looks like the politicians are finally waking up and saying, status quo is no longer good enough.
Right.
We have to change. We have to become more pro-growth, less regulations.
And to your point about the Canadian stock market, down from its highs, but outperforming the U.S. market this year. And as you noted, European stocks outperforming. You talked about that fiscal piece for Europe right now. I alluded to the fact that, some kind of fiscal support is expected here in Canada, depending how deep into it we get. It is kind of interesting because I think before we were talking about more fiscal supports, there was kind of a rallying cry from a lot of people that it's time to get our fiscal house in order. Maybe it's the U.S. experience and how disruptive that has felt that has been perhaps a reminder to world markets that an orderly approach to that is welcomed. But for Canada, I mean, this idea of growth or finding new paths to growth, I mean, at the end of the day, the U.S. is still right next to us, and forging new partnerships, new relationships. This seems like a long-term game. Fiscally, you know, if you were to see a lot of announcements from the government, depending on how things play out with the tariff front, would you feel okay about that as a support for Canada's economy? I guess at the end of the day, would that seem to make the most sense to you?
I think a lot of Canadians are realizing that they're more willing to have some fiscal support for Canada. So I think that's very important. But I do think this is a big wake-up call for Canadians that U.S. has been our biggest trading partner for the longest time, and it is time to diversify, whether it be within Canada, removing trade barriers, or with other countries. So I think it's very important that we plan for mid to long term to figure out how we can best find new trade relationships.
All right. Well, Laura, we're going to take a quick break, but we want to come back, talk a little bit about some individual stocks that you're watching closely that in some ways play